very glad to be here in the library of the European Parliament. I've never been here, and it's a wonderful place. And while listening to what Christian has shown us today, a very clear presentation of a very important and interesting report, followed by very practical and very concrete comments and questions from MEP Moise, I've realized that although we are in a library, this is by no means an academic debate. We can have reports and we can show pictures and slides with figures and policy recommendations, but at the end of the day, if we want to stay in touch with reality, we should really, at some point, bring the discussion at street level and understand what is the actual impact of what we do here in Brussels, in particular in trade policy, at the level of every single citizen in Europe. And that's the kind of reflection that we've been entertaining for a while in DG Trade. We did try to revamp our communication strategy. You may have noticed the CETA comes to your town, or if you are curious, you can actually put your postal code and see how many companies in your own hometown or region are going to benefit from CETA. That's just one example of how we try to bring trade benefits closer to citizens. But here today, actually, I didn't come to defend EU trade policy that much. Actually, I don't have to do it because the report itself did justice to us to a great deal, in my view. And perhaps I should start by asking if you could plot again the slide number 16 from our OECD report, because I really want to have that as a starting point for our discussion. It's the most important slide. Slide number 16 is the one from the previous speaker, yes. It's the one that shows you the contribution of various factors that affect employment in manufacturing in Europe. It's the one that Christian said it's a bit difficult to understand. Well, I understand it I think it's very clear. You will agree with me how clear it is to go through it. And I'd like to just pick a few very clear messages that will then dispel some myths, and then once we do that, I will move to one or two key points that I wanted to leave with you for reflection. 16, you will see the number in the right-hand corner. That's one, exactly. So here, if you really wanted to blame trade for the loss of jobs in manufacturing, you should then look at the bars in blue. Solid blue and shaded blue, or I don't know, stripes blue. This is the trade, and it's interesting that the OECD analysis has broken down trade into two categories. It makes some sense. I haven't actually read the econometric analysis. I can't pass any technical judgment on the actual calculations, but I have full trust in our OECD team. We've been working together for so many years on many things, so I know they're very good at what they're doing. So it probably makes some sense, that distinction. But nevertheless, you see that by most accounts, the impact of trade on jobs in manufacturing is split into two parts. If you are importing intermediates, in other words, the kind of things that go into my iPhone or into your cars, and if you actually export the final product for which you use those intermediates, then trade actually has a positive impact. That kind of trade has a positive impact on manufacturing jobs. So, for instance, look at Italy. If we were to do the net impact of trade on Italy manufacturing, the so-called negative effect from final consumption, the fridges and the cars and everything else that doesn't need any more industrial processing in Europe, if you deduct that from the positive, you still have a positive impact in Italy. It's a clear net positive impact in Japan. Nobody really questioned that, but it's good to have it confirmed. It's basically neutral on Australia, and they don't seem to trade per se. It doesn't seem to actually lead to any major loss in manufacturing because the two elements offset each other. So it's pretty much the same case, either positive. Take US. It's very interesting. Trade seems to be a net contributor to manufacturing employment in the United States. I don't know if the current administration knows that, but I'd rather make it even simpler than this and send it to the White House, because I think this is an important message if it gets confirmed by a technical level that the econometrics is correct. So the only one that seems to be a net loser from trade, and look how small it is in the sample of countries that OECD has put forward, is Canada. But Canada, it's a country that actually cherishes free trade, and I think they benefit from free trade in many other ways. So what I wanted to actually, and I'm concluding on this point with this chart, is that by no means trade can be, with a broad brush kind of statement, say trade is the major driver for manufacturing job losses in developed countries. That's clear already, and we have the numbers to back it up, not just as a statement, but with actual numbers. And moreover, depending on your situation and the way you actually integrate in global supply chains, trade, even in developed countries, can actually be a net contributor to manufacturing jobs. So with that nuanced approach, you can still do some hair splitting on intermediates and consumption and all those kind of finer points. But I think this is a very important conclusion that puts us on a safer ground than we were before. So, but that doesn't mean that I should keep talking only about the benefits from trade, and I should regurgitate to you all the other key messages you've been probably listening so far about the 31 million jobs supported by trade, about so on and so forth. It's also very important, I think, these days to recognize even more acutely and more openly, and I would be the first one to do so, at least personally, if not on behalf of DigiTrade, although DigiTrade does that very well itself, is to admit very openly that globalization has drawbacks. It's not that every single individual will de facto, by default, automatically benefit from globalization. There is no guarantee. So we need to admit it. We also need to admit it that technology is the major factor, as MEP Moises said, so we shouldn't just find a scapegoat that we should then actually put to the wall and try to close our borders, because as the OECD study shows, we are actually in most cases net beneficiaries from an open trade policy like the one we're trying to conduct. So if we have to admit that globalization has some pockets of negative impacts, then what's next? Well, the first thing to do is, as MEP Moises already alluded to, is to admit that if trade policy in Europe is conducted at EU level, now we have a judgment from the Court of Justice saying that it's mostly European competence. Well, whatever that separation it is, since we have a big share in what we do as a policy-making body, we shouldn't shy away from our responsibilities. I don't think it's fair to say, look, we sign FTAs, most of the time they are very good deals for Europe. Overall, we benefit as societies overall in Europe, and even in manufacturing you would see benefits. Look at Korea. We have a major surplus now, which partly can be attributed to our FTA. And when it comes to actual people who are in their little region or village or small town losing their jobs because of some sort of unfair competition or just fair but tough competition with the rest of the world, well, you know what? Then that's not for the EU. It's for the member states. So we deal with the fancy stuff and we let member states alone to deal with the unemployment. I don't think that's a fair political deal. And in fact, it wasn't a fair political deal 10 years ago when the Commission actually, together with member states and the European Parliament, adopted the European Globalization Fund. I mean, very few people know that this year is the 10th anniversary of the European Globalization Fund. Very few people know that the European Globalization Fund, unlike some of the messages that seem to emerge from the OECD report, which seems to, again, with a broad brush, say that, well, these trade-specific adjustment mechanisms, they tend not to work that well, so don't focus too much on them. It may be a US story, I'm not that well informed to judge, but when it comes to the European Globalization Fund, I am very well informed, because we have actually conducted a midterm evaluation after 10 years. We have the clear facts to show that roughly 140,000 people, unemployed people in Europe, have benefited from a very small instrument, after all. The European Globalization Fund is 150 million. It's pocket money left from the EU budget. It's not even part of the budget. It's leftovers from other instruments, money that is not spent. And for many reasons, including bureaucratic ones, even this small budget is not fully spent on people. So there's money in your bank account in Brussels. There are people on the street dying for need to be retrained or helped to get another job, and we cannot connect the dots. And that's the situation now. So that's why I think we need to have a debate on how to make the European Globalization Fund, for which we have clear evidence that it has worked. It actually assisted 140,000 people. More than half of those people actually got a job. 70% of people who got a job after EGF intervention, it's a permanent job. And more than 60% we interviewed from those who actually got a job. They say they like their job now, the new job, either more or just as much as the previous job. So there are many metrics by which you can't just discard EGF as like a waste of money. But I think globalization gives us so much economic prosperity, and I'm not going to give you the back of the envelope calculation today, but if you were to engage in that calculation, try to figure out what is the benefit from Europe being a global player, being open to the world, you will find it, I'll give you a hint, you will find in a council summary conclusion, you will see how much of EU GDP is supported by EU being open to the world. Try to figure out how much we spend from those economic benefits on the so-called loser of globalization. And you will see how little that is if you compare the EGF budget with the benefits that the continent derives from globalization. Now, I think we can afford to spend a little bit more in order to have political stability and the kind of political orientation that will allow us to remain competitive, that will allow us to stay on top of the games, as MEP Moises said, because the others are not idle. If you think that the Chinas of the world and other emerging economies are just producing textiles and cheap shoes, you are mistaken. And again, the OECD report shows that. So we need to keep ahead of our game. We need to make sure that we remain competitive. It's a very complex policy mix. I'm glad that for once trade is not at the forefront. We play a minor role. But I think it's fair to say that whenever we have collateral damage, let's call it that way, temporary unemployment, we should be there to help if we can. Thank you.